October 22, 2025, the world is on edge. A financial earthquake has erupted from Beijing. China is dumping U.S. Treasury bonds. This isn't a routine market move, it's a direct response to new U.S. trade tariffs. For years, experts called this China's nuclear option. Now, it's reality. By selling U.S. debt, China aims to drive up American borrowing costs, making life more expensive for everyone. This marks a dramatic escalation in the trade war, turning it into a financial conflict with global consequences. The U.S. has long relied on China to buy its debt, keeping interest rates low and funding government spending. This relationship was called financial mutually assured destruction. Neither side could weaponize it without self-harm. Beijing's move signals new resolve, suggesting Chinese leaders believe they can weather the fallout. Why does it matter? Because this battle could hit your wallet, affecting loans, jobs, and the value of your money. The global economy is so interconnected that a shock like this ripples everywhere. The standoff between Washington and Beijing is no longer distant drama, it's at the world's doorstep. Understanding this moment is critical. The next few weeks will determine if this is a short-term shock or the start of a volatile new era. The stakes are enormous, the world is watching, and the outcome will shape the future of global finance. The question now, who will blink first? The US and China are locked in a high-stakes game with no easy exit. The financial world is bracing for aftershocks. The era of economic brinkmanship has arrived, and everyone, everywhere, will feel its impact. To understand today's crisis, we need to rewind. Decades ago, China opened its economy, flooding the US with cheap goods. This created a massive trade imbalance. China sold far more to the US than it bought. As a result, China accumulated huge amounts of US dollars. What to do with all that cash? Beijing bought U.S. Treasury bonds, essentially lending money to America. For China, it was a safe investment. For the U.S., it meant cheap borrowing. This arrangement fueled American consumption and Chinese growth. But it also created a vulnerability. What if China stopped buying or started selling U.S. debt? For years, this was just a theoretical threat, too risky for either side to use. The trade war changed everything. The U.S. imposed tariffs to cut the trade deficit, China retaliated, trust eroded, and Treasury bonds became a bargaining chip. Beijing saw its vast holdings as leverage, a tool to push back against U.S. pressure. The stage was set for confrontation. Now, that doomsday weapon is in play. The U.S. became the world's biggest debtor, China, its largest foreign banker. This interdependence was once stabilizing. Now, it's a source of risk. The financial relationship that underpinned global growth is unraveling. The world is watching as two giants weaponize their economic ties. The fallout could reshape the global order. The question, can either side afford to go all the way? The answer will define the next chapter in U.S.-China relations. Yesterday, China's central bank announced it had sold $50 billion in U.S. treasuries in just 1 week. This wasn't a slow reduction, it was a deliberate shock to the system. The timing was no accident. It followed the U.S. announcement of sweeping new tariffs. China's foreign ministry declared, "We will not be bullied. We must defend our interests." President Xi Jinping stayed silent, but the message was clear. China's patience is gone. On the U.S. side, President Trump called China desperate, insisting America is stronger than ever. Treasury officials tried to calm markets, but anxiety is rising in Washington and on Wall Street. Before the sell-off, China held about $800 billion in U.S. treasuries. The $50 billion sale is just a fraction, but the intent has spooked investors. The fear? This could be the first of many sales, each one ratcheting up the pressure. If China keeps selling, other foreign investors might panic and follow suit. That could trigger a dangerous spiral, making it harder and more expensive for the U.S. to borrow. The financial chess match is underway. Both sides are signaling resolve, but the risks are mounting. The world's two largest economies are now locked in a test of nerves. The next moves could determine the fate of global markets. The stakes have never been higher. The world is holding its breath. Global markets reacted instantly. News of China's treasury dump triggered panic selling from Tokyo to New York. The Dow plunged over 1,000 points in an hour, its worst drop this year. Investors fled to safe havens. Gold, Swiss francs, Japanese yen, the VIX, Wall Street's fear gauge, spiked to pandemic-era highs. The U.S. bond market took a direct hit. Yields on 10-year treasuries surged. That means higher borrowing costs for mortgages, car loans, and businesses. The U.S. dollar wobbled as traders questioned its long-term safety. Confidence in the dollar's dominance cracked, if only briefly. The chaos spread. European and Asian stocks tumbled, emerging markets were hammered. Currencies in Brazil, South Africa, and Turkey fell as investors pulled out. China's move exported instability worldwide, creating a shared crisis. The financial shockwaves are just beginning. The world is bracing for what comes next. The fallout isn't just financial, it's geopolitical. U.S. allies like Germany, Japan, and South Korea are caught in the crossfire, torn between security ties to America and economic ties to China. Developing nations face even greater risks. Rising U.S. rates could trigger capital flight, currency crises, and recession. The world's most vulnerable populations may pay the highest price. Global supply chains, already strained by tariffs, now face financial instability and currency swings. Businesses worldwide are hit by higher costs and uncertainty. The standoff is accelerating a split into rival economic blocs, one led by the U.S., the other by China. Decades of globalization are at risk of unraveling. The world's becoming less connected, more fragmented, and more contentious. The cost of this superpower clash will be felt everywhere. The global order is shifting before our eyes. To make sense of the chaos, we turn to the experts. Dr. Elena Petrova, former IMF official. This is weaponized interdependence. Trust in the global system is breaking down. Michael Vance, security analyst. China's leaders have gamed this out. They believe the U.S. can't handle sustained pain. It's a high-risk, high-reward play. Jane Lee, U.S. manufacturing CEO. We're being crushed between two giants. Tariffs raised our costs. Now financial instability threatens our survival. We need de-escalation. Former U.S. ambassador to China. This is about global leadership. China wants to show the U.S. is unreliable and that it offers a more stable alternative. The consensus: there are no winners in a financial war. The trust that underpins the global system is fragile, and once broken, hard to restore. The business community is desperate for stability. Diplomats warn this is about more than money. It's about the future of the international order. Both sides are playing for high stakes, but the risks are enormous. The world is watching for signs of compromise or escalation. The next moves will shape the global landscape for years. The experts agree. Dialogue is urgent. The alternative is a prolonged, damaging standoff. The world can't afford that outcome. The time for leadership is now. The clock is ticking. The stakes couldn't be higher. Ordinary people are feeling the pain. In the U.S., mortgage and loan rates are rising, putting homes and cars out of reach for many. Small businesses face tighter credit and uncertainty, stalling investment and hiring. In China, export jobs are at risk as U.S. orders dry up, threatening layoffs and social unrest. Both governments' gambles are hitting their own citizens hardest. Everyday life is getting tougher on both sides of the Pacific. Economic warfare rarely has a clear winner, only real-world losers. The financial clash is redrawing the global map. U.S. allies are questioning American leadership and hedging their bets with China. President Trump faces political backlash at home as markets tumble and rates rise. In China, President Xi is projecting strength but risks backlash if the economy falters. Other powers, Russia, India, Brazil, see opportunities to boost their influence. The old world order is unraveling, replaced by a more multipolar, unpredictable landscape. This crisis is accelerating the shift. The balance of power is in flux. The world stands at a crossroads. Will the shock force the U.S. and China back to the table, or push them deeper into confrontation? The next days are critical. Global leaders, central banks, and institutions must call for calm and dialogue. The world can't afford to be a bystander. Billions of lives are at stake. In this moment, informed, responsible leadership is essential. The story is still unfolding. The future is unwritten. The need for clarity and reason has never been greater.